Hey, good morning. Let's go over today's trade plan. So in the overnight session, the sell side has been dominant, and technically the breakout attempt from yesterday has already failed. So our overnight bias is bearish heading into the open. Looking at the other markets, Nasdaq has also broken below the lows from the previous 2 days. So heading into today, we have to be open to some more sell side activity. Now our short-term bias is going to continue to be neutral, and we are going to have to assess the market situation in real time to determine whether the sellers are really stepping in. But the overnight session has been relatively bearish so far in the S&P as well as in the Nasdaq. So far we have pre-market support at 56.75 to 58.75, and a break below this area would just confirm that the sell side is dominant, and it would bring the 53.25 to 54 yesterday's lows into play. At that point, the likelihood of that area holding is relatively low, and we could go down into 47 to 49 quite easily. And if the market is really pushing down on a lot of broad market weakness, with the other markets also participating in the downside and some strong downside momentum, then even 47 to 49 doesn't technically have to hold, and we may actually push even a little bit lower into 42.5 to 44.5 in order to attract responsive buyers. So again, that's something that we will have to gauge in real time, and it's going to depend on how the market approaches the 47 to 49 zone. If it's exhausted into it, then the likelihood of buyers being active would be a little bit higher. But if it's going down in a very methodical way, where it's balancing and then breaking down and then balancing again and then breaking down, then it would make it a riskier area to initiate along, and it would open the door for a test of 42.5 to 44.5, where responsive buyers could still defend on first test. On the upside, we have pre-market resistance at 60.75, and continuing to hold below that level would also be a bearish signal. Beyond that, we have the previous VPOC and close at 64.5, and then the main resistance area on the day is 65.75 to 67.75, which marks the overnight high, yesterday's high, as well as a high volume node at 67.75. And in order to break out beyond initial resistance, we will have to see broad market strength and sustained upside momentum, as well as the other markets participating in the upside move. And a lack of upside momentum at initial resistance would be a warning sign for buyers and could attract sellers in the market. In the event that we get a breakout beyond initial resistance, we can get a move into 74 to 76 and 77.75 to 78.75. At that point, the reward to risk is not really going to support the buy side anymore, so we could see responsive sellers active at the resistance zones above, especially at 77.75 to 78.75 and 80.25 to 82.25. So again, heading into the open, our short-term bias is neutral, the overnight bias is bearish, and if off the open we continue to see bearish signals in real time, then we'll look for some short setups. Ideally, we still want to get some good trade location on the short side, but if the real-time situation is extremely bearish and the momentum is clearly to the downside, then we don't have to be as picky on trade location. It doesn't mean that we should be shorting it after it's already made a large move and it's already exhausted. That's almost always a bad idea. But if we're getting relatively good trade location and there is still enough range potential left on the day, then it would be okay to take a short at perhaps broken support acting as resistance instead of waiting for the market to get to resistance. Again, that's something that we will have to gauge in real time. Lastly, it is the last day of the quarter, which sometimes, we can see some squaring of positions and it can lead to some short-term chop or balancing. So assess the situation in real time. If things are unclear, where there's not really any clear-cut strength or weakness, then it's going to be better to be patient and wait for ideal trade location. The only time you want to get aggressive is when you're seeing a high degree of directional conviction in the market. And if that's not present, then you want to wait for the ideal location. You want to wait for the zones. And if that means no trades, then that's still okay. It's still better than getting involved at very poor location where you're not really going to have the reward to risk necessary to take the trade, or where managing the trade is going to be quite difficult. So those are the main ideas heading into the open. Let's see if the buy side can hold 56.75 to 58.75 and then actually get it back above 60.75 at least in order to show that buyers are actually stepping in. Continuing to hold below 60.75 and balancing below that level would be a bearish signal, and it could lead to eventually a break of pre-market support for a move down to initial support. So those are the main thoughts. Let's see if the buy side can step in off the open, and we'll take it from there.